Bro, Sam wants to explain how to determine confluence. It's quite overwhelming because there are so many DMs asking the same thing, but it's okay. Let me explain it to you. All right, bro. Let's say we've just got a bullish engulfing signal on the H4 time frame. That means our main focus is looking for buy opportunities. Now, around the area where this engulfing formed, that's where we want to start looking for a proper entry. This is where we need confluence, especially from trend lines. So how do we look for confluence? Relax. I'll explain, but make sure you understand this part first. All right, bro. Let's assume we already got the market direction from H4, which is a bullish engulfing. That means our bias is buy. Now we drop down to H1. Take a look at H1. Before we even start drawing trend lines, the first thing we do is check whether there's another engulfing inside this H4 block. If there is, that's even better. Why? Because it helps us identify a more important and more precise entry area on a lower time frame. Now, some of you might ask, bro, what if there's no engulfing on H1? Chill, that's totally fine. It's not a problem. What matters is that we find logical confluence. When the confluence is strong, the entry area will naturally become clear. Okay, moving on. After we find another engulfing on H1, that's when we start looking for confluence. But before we continue, I want you guys to first look at this H1 line chart. Do you think you can spot a good confluence to mark here? On the side, there are a few resistance levels. For example, if you draw a trend line from this resistance to that resistance, does it make sense? In my opinion, no, it doesn't. Why? Because it doesn't enter the engulfing area. Got it? Now, what if we draw the trend line from this resistance to this one instead? Does this make sense? Yes, it does. Why? Because this trend line goes right into the engulfing area and has clear correlation. This is what a logical trend line looks like. At this point, we already have our first confluence. I call this a trend line breakout. Still with me? So now we have one confluence. To make the entry area even more precise, I usually look for additional confluence on the M30 time frame. All right, let's move to M30. On M30, we can see three support levels. If we draw a trend line here, it will look like this. I call this a trend line buy. Does this make sense? For me, yes, it does, because this trend line also enters the engulfing area. Now let's check the candlestick view. This is how it looks. So the question is, can I enter a trade under these conditions? For me, yes, I can, because the trend line breakout and the trend line buy are correlated, and both are inside the engulfing area. But if you want an even smaller entry zone and stronger confirmation, it's easy. We just drop down to M15. All right, now look at M15. Here we have two support levels. Just draw the trend line and it will look like this. Notice this. On M15, there's another bullish engulfing. Plus, the confluence is now very clear and very precise. So where's the entry? Right here. Exactly between the trendline confluence and the engulfing. From here, you already have clear and logical reasons to enter. First, multiple time frames from H4 down to M15 are aligned and all pointing to buy until we find a key entry area. Second, engulfing. We get additional engulfing on lower time frames, which strengthens our buy bias. Third, the trendline breakout and trendline buy are correlated and make sense. The point is, you're not entering randomly. Everything has a reason. You get it, bro? Next, I'll show you another example. How to look for confluence when we find a bearish engulfing. All right, bro. Now, let's assume we find a bearish engulfing on H4. Remember, when we get a bearish engulfing, our focus is selling, not buying. Now, we drop down to H1. Take a good look at H1. Turns out there's no engulfing here. Relax, that's normal. Additional engulfings usually appear on M30 or M15. So let's check M30. Here, we can clearly see a bearish engulfing. This is a very strong sign to confirm that our sell direction is valid. The next step is simple. We look for additional confluence to make our entry more precise. Now let's continue. On the M30 line chart, take a look. Is there any support level that makes sense to use for trendline confluence? I usually start with the closest one. Right here, we have one clear support. If we draw a trend line, it looks like this. Does this make sense? Yes, it does. Why? Because this trend line goes straight into the bearish engulfing area. That's very important to keep the confluence strong. But it's still not enough. We need more confluence, so we drop down again to M15. Now look at the M15 line chart. Can you find another logical confluence here? There it is. We have a clear resistance. Draw the trend line, and it looks like this. Does it make sense? Yes, clearly. Because this trend line is connected to market structure. On top of that, we also get another bearish engulfing on M15. This makes the setup even stronger and more logical. So now the question is, where do we sell? Exactly. We sell at the area where the trendline breakout and the trendline sell meet and directly correlate with the bearish engulfing. This is what a high-quality entry looks like. It has strong reasons, not random guesses. Remember, bro, this is just an off-market example. In live market conditions, things can look a bit different. But the most important thing is this. Now you understand how to identify confluence. The key takeaway? You need to consistently watch the market, keep learning, keep practicing, and most importantly, keep reviewing yourself every time you fail. Don't just blame the market. Ask yourself what you can improve in your own market reading. That's all from me, bro. In the next video, I'll break this down even deeper, more detailed, and more clearly. See you in the next video, bro.